This is Carl with the three things I'm watching for Wednesday, April the 30th, month end. Two big reports came out yesterday, and we did see some interest on these, but I want to dive into them just a touch more. And these are the consumer confidence report for March, and then the job openings. Start with the job openings. Bottom line, job openings in the United States, the lowest they've been since April 2009 when we were just dealing with the Great Recession. So we have that, but then the consumer confidence, and we've been talking about this for a while. It's going from, in my opinion, bad to worse. The current reading, the forward reading, is 54.4 on the index. It was at 67. That's the lowest. Total consumer confidence right now is the lowest it's been in 11 years. It's below the COVID lows. The bottom line is any consumer confidence reading below 80 signals recession, and we're moving into 54.4. So yeah, it does not look good for the U.S. economy. Stock market is perking up a little bit. Yeah, we've seen some buying there. The stock market and the economy are not the same thing. Do not get those two confused. The economy is slowing. We've seen a big jump in purchases this month. That's not surprising due to the fact that tariffs are coming in. So a lot of concern there, and that's going to start spilling over more heavily into the commodities here as we move forward. Chinese crush margins, another thing I'm watching here. They're pretty tight. Matter of fact, some plants in China losing money. Really, it's kind of, we saw a tightness. A lot of plants in China were running out of soybeans just a month ago. And now apparently they're flooded so much that their margins are dropping and they're slowing down and their port stocks are full. So a lot of confusing reports coming out of China, and we need a lot of clarification on them. What's interesting is that the Brazil soybean basis for export has softened, started to soften again because they're just not seeing the demand. That's starting to put a little pressure on the U.S. Did yesterday too. Now we had a flash sale announced, but at the same time, that was the first one since the first part of April. Not usual to see flash sales on soybeans this time of year, but the bottom line is we had one that didn't really help with our market setback yesterday. A lot of ethanol, a lot of month-end positioning. Today's first notice day too, so we had a lot of positioning against that. The final thing I'm watching today, the ethanol margins have improved 10 cents a gallon right now. Some thoughts that's from the, that we're going to see the summer demand, and we will. We'll see, we've been approved for E15 through the summer. We have had that for the past several years, though. So really what that does, it just prevents ethanol production and corn demand from dipping lower. So it's a good it's good. We're going to have it, but it's nothing that's going to move the needle too much on ethanol production or stocks. Those are the three things I'm watching today.